So good morning, everybody, and welcome to our Back to Business series. This is the third one in this particular series, entitled Raising Funding, What You Do and Don't Show to Your Bank. A little bit of housekeeping. First of all, could you please keep your microphones turned off? And I think that we set that up by default, but please do check. Also, then, I'm sure that you're all familiar with using Zoom by now. Please use the chat system to ask any questions that you would like as we go along, and we'll try to answer as many of those towards the end of the webinar. So I'm David Season, I'm Commercial Director of Evoke Management. So hopefully most of you have heard of us. If you haven't, then who are we? So we are a team of highly experienced finance and commercial directors, and our entire aim in life is to help SME businesses to grow and to move forward, whether that be through helping them to raise investment, improve margins, diversification, the current buzzword of pivoting, team management, mergers, acquisitions, exit, that sort of thing. Anything which is needed to make sure that your business not only survives then during the current period, but thrives as we come out of it as well. Then obviously over the course of the last couple of months, then we've been very much engaged with businesses, helping them to gain funding through the various government schemes, particularly the CBILS scheme. And this really is not only, as I said, to make sure that companies actually keep on surviving at the moment, but there's going to be a major opportunity as we come out of this for businesses that position themselves well to make the most of it. Raising investment is a fine art, and I've been an entrepreneur for 35 years, and you learn a lot of things as you go along. And knowing what to include in management packs and forecasts is absolutely essential if you're going to be successful in raising the finance. We were talking earlier on about, what do we mean by what you do and don't show the bank? We're a professional organization and we help businesses to run professionally. So we're not here to suggest things which are underhand. We're here to focus your minds on exactly what it is that the banks want to see, how optimistic, how realistic then you need to be on forecasts, what those forecasts look like, and the overall package that you put towards the banks. Then our team of directors have vast experience in doing this for many, many years before the current COVID period. And I think that's been proved by the millions of pounds that they've helped to raise over the course of the past couple of months for our clients as well. So before we start, it would be great for us to understand where everybody is in the process. And so here's a question that you can answer straight from your screen. So it's entirely anonymous. So we've got 9 different options. Then does your business want to raise finance in the next 3 months? Now, my guess is the majority of people on the call are at the very least considering that. And so the 9 different options. No, we're self-sufficient. In other words, enough cash coming through the door to keep running. We've already raised through a government scheme. We've already raised through a different method. Or yes, up to £50,000, which may well be just the bounce back scheme. 50,000 to £1 million through CBILS, 50,000 to £1 million through other types of loans, or maybe you're looking for investment either below or above £100,000, or maybe it's other methods, through grants or that sort of thing. So I believe that you can actually choose more than one of these. So please take a moment just to make your choices. Okay, great. Right, so let's get on with the main event. I'd now like to introduce my colleague, Stephen Reed, one of our finance directors, who will take us through the specifics of what you should and shouldn't show the bank. Over to you, Stephen.
Thanks, David. Good morning, everyone. I'm Stephen Reed, as David's just said. So perhaps we can just move on to the first slide, please. Okay. Now, some of this will be familiar to some of you because we are some 10 weeks into this lockdown now, and a number of things have happened. And it may be that you've not had a chance to think about a loan yet. It may be that you have considered it and pushed it aside until you had a little more clarity about where your business is going. It may be that you really haven't addressed it at all until now. So I'm going to take you through some of the basics. Some of these things you may have heard before, some of you won't have done, but I'm going to take you through essentially how you should prepare yourself if you are thinking of applying for a loan. Firstly, the most obvious thing is, do you actually need one, and why do you need one? Often it is, on the face of it, a fairly easy choice. Loans available, that's a good way to go. But you really do need to determine whether it's right for you and whether or not you can afford to pay it back, and whether there are other options. So you need to give some serious thought to whether or not you need the loan, and if you do, how much you need. I'll come on to how you should calculate that in a moment. You also need to have considered all of the options available to you. There are things you can do for yourself, which I covered in a separate session last week, that very much into tightening up your own internal controls and structures within your organization. But there are many other sources as well. Some organized by the government and cover things like grants and sick pay schemes, time to pay from HMRC, and a number of other things you will find on the government website. Most importantly, you need to know that this is a loan, it's not a freebie, and so you need to be able to afford to pay it back in due course. In the first year, you won't pay any interest or setup charges, but then it kicks in after 12 months. And typically, if you're looking at something, say 200,000, at a fairly normal interest rate that's currently around with the lenders, over a 6-year period, it'll come out around about £43,000 a year. And obviously you have to prove that you can service this loan. Lenders typically will look for 1.5 to 2 times that amount in terms of proving the serviceability. So you'll need to generate approximately £80,000 of retained earnings in the first instance. And then, I know this is it sounds terribly negative, but it's important that you do face up as well to being realistic. If you're in the service industry or you have products with a short shelf life, you're unlikely, I think, to recover the kind of revenue and profits you're losing now. It's possible, of course, you might get catch up, but a lot of you, this will have gone forever, and you will have to rebuild the business. And so you have to consider those kind of issues when you decide whether or not you want to apply for a loan in the first place. Next slide, please, David. Now, simple stuff. You can find all this information on the government sites about whether you're eligible or not. Just the basics. Firstly, you have to be a viable business. You have to prove that you've been viable going into the COVID issue or crisis. And that means you've got to be profitable for at least 2, if not 3 of the last 3 years. The standard is 3 years, but there have been instances where people will have shown a good growth over a couple. So, but you have to have a solid growth graph. You also have to be able to put forward a sound borrowing proposal. You have to have a credible rationale that you can trade through this out of the immediate and mid-term difficulties and come out in good shape. That is really critical. And of course, you have to be able to service the loan, which I mentioned earlier. There are some limitations. You can only borrow up to 25% of the turnover of the last year's turnover, or double your annual wage bill, whichever is the lower of those two. You will need to show that 50% at least of your revenue comes from trading activities and not other outside sources such as rentals and so forth. And you have, of course, to be a UK-based business. Next slide, please, David. Now, I think we've kicked on 2, David. Could I go back 1? Thank you. Now, these are the questions you should expect from your lender. Firstly, as I said on my very first slide, they will ask you why you want a loan. And they'll want to know how you've arrived at that decision and what you're going to do with it. So you need to calculate the amount required, and you need to provide a list of assumptions. Now that's important to you as much as the bank, because this is your money after all. This is not the bank's money. You're getting the loan, but you're having to pay it back. So you need to be confident that your assumptions hold water. You will need to demonstrate that you have at least researched and taken advantage of any other government schemes if they've been available to you. You need to show how you will use the funds once you get them. And you also need to demonstrate what you've done so far or are doing to secure the successful recovery of your business. Now that's important. There's a whole series of things. There's the obvious things like furloughing staff, there's taking salary reductions, but there are also longer term issues about whether you need such big premises. Can you start to look at how you structure your company? What have you done with your key customers to secure them? Are you running marketing campaigns? There's a whole bunch of things that you should be doing for yourself to make sure that your business it comes out in the best possible shape. Next one, please, David. Now, this is standard information the lenders will require. You will have to have up-to-date management accounts, and you will need to be able to show your last 3 years of filed accounts, including the profit and loss. Many of the accounts filed at the company's house have a balance sheet. They're abbreviated accounts. You will need to show your profit and loss for those 3 years. Most lenders will ask for the last 6 months bank statements just to see that you're managing your accounts in an orderly fashion. And the next one is a real killer because you will need a cash flow forecast, but you need it for the duration of the loan. Now, most of us run a cash flow forecast, but normally it is shorter term. You will need to generate a cash flow forecast that shows that you can actually, your revenue and your outgoings, and the fact you can service this loan over the duration. Now, the next items, some of these may not be asked for all the time. They will by certain lenders. But if nothing else, you should do a business plan for yourself, even if you're not asked for it, because you need to understand how you are. I'm sorry, just give me 1 second. Something has flashed up on my screen, which is not particularly helpful because I can't now see anything. You will need to show on your business plan that you have given some thought to how you will trade through this and what you will do in the longer term. You need a short-term plan and you need a longer-term plan that covers the length of the loan. You should also have a list of assets and liabilities and make sure you have a current statement of outstanding debtors and creditors. And also they will want to see if you've got any outstanding debts or finance agreements that you're already obligated to. The last thing that will come up with some lenders is confirmation that you're up to date with your tax, or you've used the availability to defer your tax under the current government schemes. Next slide, please, David. Now, I borrowed some of the upcoming slides from my colleague Robert Green, who did an excellent presentation last week. So it is preferable with all lenders to use as much graphic information as you can and not narratives. You need to make it simple for them to review it and be able to feed it into their algorithms so that you make it as simple as possible. You should include within that the behavior over time graphics to show your sales trends, not just for your company, but you need to show it as well for how your customers are responding during this particular time and your market sector. You need to show you're at least in step, if not ahead of your market sector. You should also provide evidence of the actions you've taken internally and externally to safeguard your business. I've touched on these earlier. The internal actions will be things like furloughing. It'll be about restructuring of staff. It'll be about taking advantage of all of the opportunities available to you to cut your costs. Externally, it will be about marketing and staying very, very close to your clients and making sure they're staying on board with you. And you have to also provide evidence that you've assessed the risks and how you'll mitigate them. Now, that really is important. Everybody should be doing a risk assessment, both for the short and longer term, to make sure that you can foresee any potential problems and you know how you will get past them. Next slide, please, David. Now, the next 3 or 4 slides are a series of graphics, but it's how you should present the information to the bank. This is a straightforward profit forecast that shows last year, the current year, and the forecast going forward. It shows the profit trend by month. It shows your movements and it shows your cumulative profit over time. This demonstrates at a glance that you have a viable business and it was viable going into COVID-19. Next graph, please, David. This is a straightforward profit forecast over 5 years, but far easier to see in graphic format than going through reams of paper. And this shows very clearly your performance in the current and previous year and looking forward over the coming 5 years, 6 years if you are going to take the loan over that period of time. Next one, please, David. Sales trend by month. Now, this is particularly important if you happen to be in a seasonal business where your profit moves fairly dramatically. You may have a high trading period during the summer. If you're in the hospitality business, you may have a high sales around the Christmas time. It will vary from industry to industry. And you need to be able to demonstrate what your trend is by month and what your profitability is by month and show it by customer as well. Next one, please, David. This is obviously slightly less graphic, but very necessary. You must be able to show your balance sheet and your cash flow statement. This cash flow statement must be solid. I say solid, as good as you can project it for the next 6 years. Your balance sheet should be accurate and up to date. Next one, please, David. Last graph, but this is pretty self-explanatory. This demonstrates at a glance. The important one here really is on the top right-hand side. This shows your forecasts and your performance with both your EBITDA and your sales before, during, and what you foresee coming out of the COVID pandemic. Now, these are particularly useful to lenders because they will see at a glance, both in the top right-hand corner, what you're forecasting. They'll see in the bottom left-hand corner as well, what effect you have in terms of increasing your turnover, increasing your margin. And so at a glance, they have some pretty useful information about your organization and a very clear understanding that you're in control of it. Next one, please, David. Now, we've done a lot of these applications of people, helping them put things together that the bank does want to see in a way that the bank wants to see it in terms of its ease and simplicity to read and understand. We've also come across a few things that have at times amused us, and other times we've walked away from, and other times we've been able to advise people that perhaps they should think again. Probably the most common of all of these, of course, is the fact of dealing with a figure that somebody's dreamt up because they think it sounds like a nice figure. Now, that's quite common. It's not a great start to go to the bank with something that you think actually sounds rather nice for you, but you can't substantiate. So you do need to make sure that the amount that you need is realistic, not overly optimistic, but equally not pessimistic. It needs to get you by. You don't need to be doing this again a year down the road. You need to avoid overstating the effects of the pandemic on your business, because it is you're kidding. It's not the bank. Even if you get the loan away, you still got to pay it back after a year, or start paying it back after a year. So it's important that you don't overstate the effects. It's not wise to roll up all your existing loans. I mean, there is some provision within the current civils loan that you can incorporate some loans, but we've got examples where somebody has taken a loan, misspent the money, and then applied for another loan so they can pay off the old loan. Now, that is not the purpose of this. This is actually for you to trade out of this dreadful situation and allow you to have a successful business coming out the back end, not simply to get rid of your current problems. Don't be overly optimistic. I mean, you see all sorts of things about suddenly sales are going to spring back up. We all know now there's not going to be a V-shaped recovery on this. It will take longer. So be aware of what's happening in your industry. Be aware of your own resources. Be aware of some of the issues that we will all face, and take a realistic view about how you will deal with them. We've had a few really kind of oddball ones as well. We had one where a company had acquired another company and simply consolidated those figures into its last year-end filed accounts, which made it look very rosy, but not particularly, what should we say, perhaps on the wrong side of ethical, if not illegal. I came across somebody who deposited an R&D check into a separate account, which when we went through the accounts, that became evident. We had somebody using the money to actually benefit from the goodwill of the business of themselves, and somebody else that had actually paid themselves quite a nice redundancy package and then closed their business. So all of those things are companies we don't really want to be involved with, but they are happening, and there's a lot of sharp practice out there as well. So we want to make sure we give you the best possible advice, steer you in the right direction, make sure that you're as secure as you can be, and you tell the right information to the bank. Last slide, please, David. So use the loan properly. Make sure that you can come out of this in the right shape. Right? If you are managing well, but you're not sure if you need a loan, you're probably in a good position. But you still may want to apply, because it gives you another layer of security. It doesn't cost you anything to apply, and you have 6 months to draw down the money, and there's no penalty if you decide you don't need it, but it's there if you do need it. So now may be a good time if you're managing, but it's tough, and you want an extra sort of comfort blanket. And the last point, if you're doing really well because you're in your service or product is in high demand during this particularly difficult period, you may want to consider a loan to expand your business. This is the perfect opportunity. So looking at a very positive way, you can use this to grow, to actually acquire businesses, or to do other things that move you forward. So you've got some real options here, but make sure that you need the loan in the first place. And if you do, then we can help you to put things together in a way that the bank would like to see them. Thank you very much. Over to you, David.
Thank you very much, Stephen. Then that was great. The last point that I'd just like to pick up on, then I've seen numerous businesses that are doing very well during this period and actually have the foresight to think this is actually inexpensive money that I can raise to actually really help push the company forward. Maybe it would be helping to purchase a competitor that's doing less well, during the current period, or other ways in which the business can really be moved forward. So there are real opportunities, not just to use these government schemes to make sure that you survive, but to really thrive then as we go forwards. I'll pass over to my colleague, Rob Ball, who I believe has been monitoring any questions that have come in. Rob.
Yeah, thanks David, thanks Stephen. So yeah, there's a couple of questions that have come through to me directly, and I think one of the big challenges with this is just getting easy data to present to a bank. I know lots of companies are kind of in depths of data that's coming out of their accounting systems and just trying to make sense of it all in a way that shows a clear plan forward. So just a question around the tips for getting that there. So some of the slides that Stephen shared shows some of the extracts that we would bring out of the accounts, just to give a very high level summary. I mean, in honesty, those are the kind of summaries that someone running a business should already be using. If you've got that level of high level view of the business for the forward looking plan and some of the detail behind that, that's what you should have anyway, in theory. It's something that we can definitely help people with, but that is the kind of level the bank's going to expect. They don't want to go through the depths of detail that you've got. It's really having that high level thing. So that's one of the things that I wanted to pick up on. I think there's also another question that well, a couple of questions actually directly to me around use of the funds and whether you can use it for, you know, expanding an existing business, or whether you can use that for investment. There is the ability to use it for you know, looking to buy other businesses, buying other business assets. There is the ability to use it for that as well. So for growth investment as well. So that's definitely one of the things. I wanted to share a couple of things that we'll share in the chat. David, do you want to carry on to the next slide just so we can wrap up on time? So one of the ways that we've been helping companies through this is how we can help get people set up and ready for funding. So there's a couple of things here that we can help with. One is that we can just help very much by just checking what you've done, what you're looking at, and seeing if it looks appropriate for the bank, and whether we can save some time by just reviewing it. So that's a kind of level 1 check and submit service. Level 2 is actually taking more ownership of your planning. So actually taking your plan, creating what we think is appropriate for a bank, and then improving what you might already have in place. And then thirdly, you know, as Stephen's alluded to, you know, this is all about trading through this situation and coming out stronger, and coming out as a business that's a going concern that's going to be successful. So that ongoing support option is there as well. So if anyone's interested in having a talk about that, I've just shared a form that we use, which is just to help us capture some info, and then we can then have a 30-minute conversation with anyone happy to spend that time just sharing some of our knowledge and advice on this. So those are the things that we've got there, and I've just shared the form for anyone that wants to fill that in. And then next slide. So the next thing, David, do you want to cover this?
Yeah, no, absolutely. So thank you for your time. As you've seen, then Rob has just shared the what we call a funding requirement checklist. Please do fill that in, and we'll arrange for one of our finance directors to give you a call. It's no obligation, 30-minute chat. As a serial entrepreneur, you don't get much for nothing in life. I strongly advise you to take up the opportunity. And finally, then we're running a series of these webinars then called the Back to Business series. The next one being Friday next week at the same time, Friday the 5th of June, entitled Finding the Cash. So this is all about being able to make small tweaks to your operations so as to dramatically increase the amount of free cash that you have and extra money in your pockets. So I think, Rob, if you could just flick up the invitation for that webinar next week.
Yeah, it's already gone.
It's already gone. I didn't see it. So my mistake. So please do click on that and join us next week. If we didn't get to your questions, apologies, but fill in the form, not jot it into the notes, and we'll make sure that we cover those when we give you a call in a few days' time. Thank you very much, and we look forward to seeing you on the next Back to Business series webinar next week. Thank you.